Alrighty. What's up? Good evening, everybody. Hold on one second. Let me change that. Good evening. Good evening. What's up, Jamo the trader? Go live here really quick. Good evening. What's up, everybody? Oh, stupid thing set up. Okay, good to go there. What's up? What's up, Money Mark? What's up, Nick? We're gonna give it 5 minutes here, and we're gonna go ahead and get started, guys. By the way, this episode is sponsored by this brand of popcorn, Poppy. It's not, but they're delicious, and you should try this. I think I've eaten 16 bags so far. My puts will be printing tomorrow. I know, the Bears back at it again. We're going to talk about that here just a second. We got a lot to talk about. As you guys know, oh my gosh, everything is crazy right now. Okay, let's go over here. All right, so we got 3 or 4 more minutes, and we're gonna go ahead and get started. What time frames do you look for patterns? Excuse me. What time frame do you look for patterns on? I would say primarily for day trading. I want to be able to recognize setups on the daily and then play them out on the hourly. I like to kind of keep an eye on them in better detail on the 4-hour time frame. So. Is SPY gonna drop tomorrow? It's seemingly has already dropped. So you're gonna be waking up to a red open. So what happens after that could be you've already bounced. Futures have already bounced. But yeah, we did see that big gap down 430.81 or 43.81, opening up at 4,300. Damn, I was on the money at that level. 42.50. Is where we just tested. So there's a good chance that we could see maybe even retest, gap fills. The market's going to be responding to I'm bullish this week, 450 price target. I'm thinking that we likely stay in range. But I do also see a major support, and we'll talk about that just in a second once we get to charting. But anyway, for the most part, I'm going to be looking for patterns on the daily time frame, and then playing them out for and the hourly. So, what's your thoughts on the run we had? That was a melt up. I was expecting a run pull, but that never happened. I believe that Friday was a short squeeze, and a combination of short squeeze and forward thinking. I know there was a lot of possibilities for peace talks. Closing the week out, and I think that also helped rebound the market. We were due for a bounce regardless, and I think the market just used that as kind of an excuse here. So bad glare for the TikTok viewers. You guys got to go to YouTube. It's much better. All right, hopefully that's better. All right, you guys. It is 8:35. We're gonna go ahead and get started. Get Sunday. But I want to start, on a human level. This has been a very sad week, not a fun week to be a human being. To see a lot of the things that we can see as human beings in the palm of our hands. It used to be the televised war. You know, first there was newspapers, the television, mix of internet, you know, videos here and there, and then this is a full-on war which you can interact with, which is bizarre, surreal, but definitely makes for an eye-opening experience. So there has been obviously a bunch of human impact, as stated here, but there's also been a bunch of indirect human impacts taking place in the markets. Equity indexes were 2 for 4 this week. NASDAQ Composite and the Dow Jones trended to the downside, while the S&P traded to touch above even, and the Russell found a 6.64% gain this week. We saw in the world of bonds rose about 4 BPS to about 1.9%. This is now makes up more than 45.5 BPS since the start of the year, which is pretty incredible. The market has started to price in the forthcoming rate hikes, but also taking opportunity to risk off fixed income amid the current drama. Bitcoin was down about 2% this week, not quite exactly like futures, but we definitely have this bearish setup here looking like a pennant going to the downside. But we saw that 2%. Ethereum was just a little bit above the green, but this one has fallen as well. And of course, oil and gas, the Russian ruble, and all taking major directional moves. So reflecting on last week though, S&P closed even, NASDAQ down 0.30%, gap down filled the gap, Russell 0.64%, and then we saw the Dow Jones down 73%. Major headlines, guys, that we have coming forward. The U.S. Security Council votes to convene emergency session. For the only 11th time in history, the UN Security Council is expected to convene an emergency session of the General Assembly after the Russian invasion of Ukraine. 87 countries already moved to condemn Russia's invasion, but will be meeting. But this meeting will look to mitigate the crisis from getting even worse. The UE steps in to support Ukraine. We also saw the ruble, which already has moved to the downside, but this one may crumble. The opening of the forex markets tomorrow will likely be unkind to the Russian ruble, the currency which closed at 83 per USD, just 83 rubles per USD before the European and US announcement, has rose in light of the Russian incursion into Ukraine. One Russian bank, Tinkoff, is now offering ruble exchanges at 171 rubles per dollar. That would be very bad for Russia, Russian citizens, and Russian wealth. We'll get to see how Russian markets and its currency handle the latest invasion news tomorrow. Wall Street obviously is going to be bracing this week for these geopolitical woes. Oils, palladium. There's several different markets that are going to be afflicted by this, indirectly and directly. So, economic calendar. So for this week, guys, we have. That's not it. We've got the as far as top headlines. We've got the ISM Manufacturing Index as a high impact data point. Consumer confidence, and that is, I do this all the time. Never mind, rewind. So actually Monday, we have the Chicago PMI, wholesale inventories, retail inventories, not very high impact data. So Monday, it may be an opportunity to kind of fill the gap depending on where we're at in these geopolitical tensions, of course. So we've got that. We on the first have ISM Manufacturing Index. The second, we have EIA crude oil inventories coming in as a high impact data point. We have initial claims, continuing claims, ISM non-manufacturing index on the third, and then the fourth we finish off with a completely high impact. Obviously it's March 4th. Unemployment rate, average work week, average hourly earnings, non-farm private payrolls, and payrolls. So a lot of, and look to see the market depending on, obviously, and I'm going to be repeating myself constantly, look for the market to respond first to geopolitical tensions on major headline news that will impact us directly. And that there's an endless list, and we can discuss that later. Anyway, so that's our economic calendar going forward this week. Now, one more second. Oh, where did I put that? All right, so earnings. We have a slew of earnings coming forward this week. Oh, background music is too loud. Also, I could probably do with pointing my microphone towards my face. If you would like me to, or if you would like to see the recap, hit the link in my bio for those of you on TikTok, and you can watch the YouTube and rewind it and watch it from the beginning. Sorry about the music, guys. All right. I think Putin is a little bit smarter than we give him credit for. He's still a D-bag, but he probably and more than likely prepared to this, are prepared for this to some degree. So obviously the whole thing is just messed up. Anyway, earnings Monday. We've got as far as top looks for me, we've got Lucid, Big C, Invax, Zoom, Ride, Blink, Groupon, Canoe, Smile Direct, 3D Systems, and Laser. And I will tell you something that all of these have in common. They all have high short interest. They're heavily shorted stocks. Big C, Laser, VLDR, Smile Direct. I believe Groupon might be among them. Blink definitely. So watch for those two. Surprise. Tuesday, we've got Geo, Grocery Outlet, SE, Domino's Pizza, AutoZone, Workhorse, GRWG. That one's I actually bought a year ago, or 2 years ago, excuse me. I bought GRWG for this exact same price before it went to $70. Absolutely bonkers. It's back down to the same price. Of course, I sold it, but oh my god, excuse me. Anyway, we've got Target, AMC. I'm drinking this sour here. It's gassy. Sophie, Wish, Baidu. We've got a ton of earnings on Tuesday. Wednesday, I could go on and on. Snowflake, Dollar Tree. So we have another good group of earnings this week. We're gonna try our hand at a few, but we are going to obviously focus on more high probability plays rather than just gambling. So, so okay, sounds good. All right, make that tinier. Oh, I keep trying to click. There we go. Okay. So anyway, lots of good earnings this week. And lastly, so are we not supposed to buy the dip? I think if you're a long-term investor, I mean, you can always buy just a little bit of every dip, but yeah, I don't know. All right. So before I go to my watch list, we're gonna go ahead and look at futures. So first off, we're gonna open up more than likely, and what I'm gonna do here is I'm gonna actually split this in half. That's a mess. Okay, so for those of you guys obviously watching, oops. Okay. Watching futures is what I meant. We've had a large gap down. So looking at this at SPY, more than likely we're going to be right around here. And if you go to the same time frame, obviously you'll see right about, let's see where we at right now. So right down here into these moving averages. So right about there. So we're going to be opening up, and again, I could be wrong. We could push up all the way to 43.28, which let's see, we're 4,300. So uh, yeah, 43.28. So we could see for a little bit of a move to the upside, but regardless, we're still going to open lower. The severity of that open will kind of imply the move directly, because in all actuality, this was a big dip for sure, but that dip has since recovered. You got a nice doji there, and you've recovered a pushback up to the upside. So you'll have a reasonable gap to the upside on SPY, which could set you up for a gap fill and chop. And unfortunately, I think that's the kind of movement that you can expect with the current geopolitical climate that we're in. That being said, we don't know how other markets are going to respond, and we, of course, will likely feel the same pain. So, anyway, looking at SPY on the daily, monthly, excuse me, or no, excuse me, daily. What am I talking about? The monthly. So we were really, really close to our 200-day EMA. And we're back down now, pretty much at this white line, which is the 430 mark. That completely engulfs this candle. So if we fill that gap, that is really, really bullish, especially if we continue to push and we go and cruise into this 440 area. And that would likely, and is my target to the upside. There are a few gaps to the upside on SPY. So I will be watching for SPY to potentially go and fill its gap to the upside. And from there, from that 440 mark, and obviously observing geopolitical tensions and how far away we are from our next set of economic data points, that's where I'll kind of be looking for SPY to actually break. Because if it's anywhere towards the end of the week, say Wednesday, Thursday, I would expect SPY to stay in range, especially with the climate currently. So, Honey Bunny, you there? What are you talking about? I can hear you. I can't hear you guys. Don't quit your 9 to 5, please, God. Don't do that because you made money on one contract. Please, Lord, spare yourself. We dipping? We've done dipped. What website am I looking at? This is StockTwits. Here, I'll post it in the YouTube channel. Um, all right. Sorry, I was just reading that comment. Anyway, so QQQ, same thing. You can see this downtrend that I have shaped up. I had a mark for 350. We'll likely open up around the 335, 330 range, 332s. And that's a big, big gap for the Qs to try and push to go and hit this resistance. So expect, and the analysis that I dropped on Microsoft and a lot of other stocks was for chop, and I think that there is a lot of potential range bound trading that is likely to happen. But I also just want to be honest with you guys, and this is my opinion, but I am quite certain that things may end up getting worse before they get better. And if that ends up happening, the Qs and SPY are both set up to continue to fall. And one thing that I want to remind you guys of going into this week, and I've shown you guys this from the top almost. Cue the Megan Thee Stallion song. So to show you guys again, the difference between a bear market, market correction, and a stock market crash. If you guys will notice here, this sure looks a hell of a lot like a market correction. And if you were to just kind of screenshot that there, um, and paste it right there, uh, that's kind of the movement that you're getting already, is that big bounce, right? That retracement almost to the same levels, and then a reversal to the downside. You can see it flat lines there, literally 457.60, and then makes a new, more drastic low. So if we continue to raise up, or continue to fall from here after filling whatever gap is there, I would imagine that the next leg down could be a little bit more drastic, and my target remains at 400, 401 for SPY. So, and that's to the downside. But I want to also add another thing, because I've noticed this feeling that I've had a feeling too, that a lot of people, especially you new people, are taking the market personally, um, and feeling that the regular market is occurring and you're not doing. Now that could be true too, but you're not up to par, or you're not smart enough, or what. This is really, really, really tough trading conditions. And I'm going to repeat that over and over again because it's true. It's tough for me. It's tough for people who have been doing this for 30 years. And the safest place is always cash. And it's the best time to look back at all the progress that you've made. And even though it may test your patience, not trading or using extreme minimal risk is always a safe bet for me whenever I'm trading in these type of conditions, because these type of conditions will bleed you dry. If it's market makers' jobs to take money from you most of the time, then in these conditions, they want to take money from you all of the time. And that's with options, that's with equity. So, um, dude, Potter was 10 years old, came out in 08. I'm 29 years old. I don't even, is that true? I don't feel like that's true. I don't even remember. All right, so that brings me to my next point, or next breakdown here. So this is my watch list for this week. Keeping it simple, pretty straightforward. We do have earnings gambles, but Square. So this one, man, almost both ways. Now this is going to be rough, guys, because this one's got a slew of not necessarily tough. It's just going to take some serious position sizing. We'll just leave it at that. So Square, with the rest of the market, I predict Square gaps down to around 103, possibly even 100. That's going to set up a messy, messy setup right now, because you're going to have a small gap to the downside, 96.23, and you're going to have a larger gap to the upside at 114.32. And then just over that day's high, you've got another gap to fill at 127.47. For those of you who are in the Discord, make sure to go leave a reaction in the PotterStocks analysis page, because that's where I've posted the monthly and the daily chart on this. And this is what I want to show you guys. I'm going to show you this monthly chart because this is a good learning experience when it comes to key levels and whether they're real or not. So first of all, we're looking at the SQ monthly chart. And if you'll notice exactly where this wick is, it's off of this level. 1, 2, 3, 4, right? And it even holds this wick up right here. So that's exactly where we bounced off of. And this is after taking a massive fall from $290. Now, I promise you that CEOs took profit here. Lots of big money left SQ. And that being said, dropping all the way to $85 This thing's due for a bounce, and looking at it on all different time frames, the market still has the ability to continue to bleed to the upside. And at the moment, looking at this downtrend, and this is why I said things are going to get messy, guys, because it's not necessarily the most perfect setup all around. And that goes for SPY and everything. And it's a messy setup in the world. So the market is built to reflect that oftentimes. So I've got a downtrend, and I've looked at this on multiple different time frames. This level of 133.10 is valid. And to me, probably going to move down, likely to around 130. And that's the 50-day EMA on the daily time frame, with a small gap to fill at 127.33, and that's that body closed right there. You can't see it, but the candle closed there and it opened right there, leaving a gap. So that's where we're at with SQ. I want to go and fill that gap. And that's the thing, is there's gaps everywhere. So if we gap down and we're anywhere around here, or if we gap down and we're down back around in the 80s, which I don't know if we're going to hurt that hard, but if we do, that's where I would want to try and buy a bounce, because again, things are going to get messy. So good candlestick examples there though, and supply and demand on SQ. So Microsoft, this one is also obviously running with the Qs, likely to see a potential, and I have the analysis right here. So downtrend right there, or excuse me, actually this is a lower time frame pattern. So this seems to be a valid pattern setup right here. I've been looking at it. You've got 1, 2, 3, 4 touches kind of confirming that, and then to the downside. Now this is where things are a little bit weirder, because obviously you've got a big bounce level at 220, 276, and you've got a big bounce level at 271. This lower low could set up for a wedge, which in fact, at this point, we're likely to go and tap support one more time with the current trajectory that we have, unless futures can open back up and leave us a smaller gap. If there's a smaller gap and we move up and we fill that gap, then there's a decent chance that we can still go hit 302.75. And that is the current downtrend for Microsoft. But again, I would like to remind you guys, and I'm going to keep saying it, that anytime things crash, there's always big green candlesticks, guys, and they're just as easily engulfed. Look at this candlestick, almost gravestone doji on the daily, huge dump, right? Immediately the next day you gap up. Why is this type of price action happening, and why is it going to hurt you trying to trade it all the time or swing it? Because this is when swinging can get tough unless you're sticking with the basics. This is all based off of fear and greed and market reaction to the situation. This is COVID. The government's going to step in. We have vaccines. We don't have vaccines. This company's not working. Blah, 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 right? All the way down. We have good news. We have bad news. Spreading here. It's getting better. No, it's not. Everything's fine. No, it's not. And then all of a sudden we find ourselves down around 135 on Microsoft. So please remember that that's what's happening right now, right? We're not sure if we're going to war. Also, yield rates back down, right? So all of these things are important. Yeah, Belarus is joining Russia to fight Ukraine. So all of these things are crucial to remember. And remember that the safest place, and this is a warning to myself and to just anybody, I wouldn't even call it a warning. It is what it is. The market is going to be unpredictable as war and geopolitical tensions as they are right now. It's just going to be hard, especially with this. And so and God dog it,
I said this on Friday, right before the close. I said, if you're going to swing, you cannot swing in these conditions without a hedge, because oftentimes your hedge will end up being more profitable than your call if things turn around. Because if we're looking at candlestick analysis, everything is going to tell you that this giant green candle is a go, but that's a short squeeze. That's the gap getting filled, people trying to redouble down to the downside and then getting absolutely smashed all day. And then you see the volume dissipate, because all in all, this isn't a crazy volume stick for Microsoft. So anyway, after all that rambling, I will be watching Microsoft wherever we will open up, and we will talk about these stocks more, because how they open is very, very important, obviously. So ice cream, bros for hoes. Yes. I like the second one, not the first one. This recap is on YouTube. The link is in the bio. Belarus. Yeah, that sucks. That really sucks. I don't like that at all, man. I wish this would just stop. Thanks to Potter. You know, you got it. Hmm. Definitely good at popcorn. Seriously. Delicious. Mm. I just did a huge order of Mexican candy, like a mystery box. It's like Gushers with like the spicy powder on it. Oh my god, I'm so excited. I love that's like I actually grew up in El Paso, so I for a little while anyway. So I remember eating like spicy popsicles and stuff. It's delicious. Anyway, Apple, of course, I'll keep this one short and we'll take a couple requests before the end of the night. So Apple actually has pretty attractive upside. This one obviously running out a little bit of steam here with the volume on Friday. This one is likely to gap down, I'd say 162.15 and or 160. If you step down to the hourly, you'll see the weakness on the candles. And I stared at these candles, guys, on Apple all day on Friday, and I was like, man, I should short this thing, and I didn't. But if it opens up around 162.33, that's a potential inverse head and shoulders setup. If it does not, then watch for a potential open around 160, and then obviously you have the gap fill. But to the upside, watch a rejection at 162.27. So if you're a scalper, you want to be quick with it, and you want to probably be out if you're anywhere around there. If you're holding day trading, you want to make sure that you have enough volume and the sentiment is on your side, and be aware of what that is in the morning. So be up bright and early. All right. So anyway, Apple has a gap to the downside. It's going to have multiple gaps tomorrow. And for that, it is on my watch list. There's also a gap at 172.50. So, all right, those of you guys on Facebook, or excuse me, Facebook, what am I talking about? Those of you on YouTube, please drop one request, and then only one time. Please do not double request. If you are on TikTok and you want me to take a look at a stock for you, you need to drop the request on YouTube. You have to subscribe and stay there for 1 minute. I know it's the worst, but that way you can actually leave a comment. But hit the link in my bio, and if you have a stock you want me to take a look at, I will take a look at it. So, alrighty. So I'm gonna start with the most recent ones. Um, I don't think 400 is the bottom now. I think that when things stop getting bad, that's the bottom. When tensions die down, that's the bottom. So, all right. So all of these, get prepared to hear the same thing over and over again tonight. I am literally going to be repeating. It's going to open lower, because it is. It's going to more than likely open lower. Perhaps energy Obviously, oils, stuff like that, things that are moving inversely to the market may benefit. So to the upside, you could watch the level, and I'm going to just give it to you 162. Well, 160, obviously. 160 is always your psychological number, but 162.50 would likely be that downtrend. And this is where I can't tell you, because you can see that there's an obvious level right here. So to the downside, you've got a good gap down level at 145 to 143.30. And then to the upside, you're going to want to break around 154.50 to 155 to the upside in order to start making your way over to this downtrend. And I think this downtrend is valid. Let's see here. I don't know what that sound is outside of my house, but it sounds like, I don't know what that sounds like actually. Sounds like someone's digging up underneath my house. Or like a drill. Where's my air conditioning? Sure. Yeah, give me 1 second. So anyway, ENPF kind of giving off the descending triangle vibe, but you could technically ignore that and think of this as a potential correction coming on Friday. Just like the rest of them, the body opens around 118.64. So truly it is just a bounce off of support. So this just could be a classic double bottom, and you'll see ENPF around 182.75. So you said CCL possible bear flag. I would certainly hope so, because that's a garbage company. Yes, CCL 1, 2, and a 3, and a 4, and a 5 times you hit support, and then you finally broke down. But guess what? This is a perfect example of a possible deviation channel, right? So how does standard deviation channels work? They are exactly what they sound like. An expansion, channels, right? And these channels are ever expanding. So right here, look at this bottom support, right? That's the support there. That's our resistance. And that's also our support. It's pretty cool stuff right here. I actually really love the standard deviation channel for all kinds of trading. Standard deviation channels, I believe, should be in the arsenal of every long-term investor and every any day trader, anything like that. I think that everybody should be aware of how the standard deviation channel works, and it's always good for an occasional look back. Anyway, CCL, I would agree to some extent that you are in a bear flag. Yes, you have that, and it's chilling out in this channel. So, and this is the beautiful thing about this is mathematically, right? We could say that let's say below $20, and this is where you could just start taking a bet, because at the end of the day, sometimes you just start with a bet, and then that bet turns into an investment, and that investment turns into a strategy. Like, you can obviously see that there's a well-respected support here, a well-respected resistance there, and you can pretty much take the break. So below $20, right, you're going to head for support. This is the last straw. I don't believe that CCL can hold up against another tap of support. So if it does, we're going to see CCL around $13.84. If any anything with any virus happens, not good. War, not good. Who's taking vacations if I don't even want to put this out there. If multiple countries are participating, yeah, sorry, but you're probably not going to be able to do too many cruises there, Carnival, and also Carnival's just garbage. So anyway, a couple key levels to the downside for CCL. This is actually a really interesting chart and might be worth writing down as a speculative play. You could just take a speculative, very cheap, out of the money, and test something with real money like this. Go a couple months out, grab the downside, try and hedge yourself using shorter expiration contracts. I really like this this setup. Good eye on that one. Good eye. All right. So I'm gonna write a C on my notebook. I'm writing CCL, CCL standard dev bear flag target down, right? Is going to be, we've got multiple targets, right? So the support bounce here, supply and demand, that's $16. So 16 is the first target. So I'm putting first 16. Second, right? And we expect some time between that. Now, if it goes back up, right? Because we only have 1, 2, perhaps we get one more. Now it's probably going to gap down on us tomorrow. But if it does, perhaps we could, or if we fill that gap and go up, perhaps we hit the 24.76. We still stay in trend, but we also look to potentially lengthen the extent of the downside. Because the longer, if this is true, the longer that you stay up at a resistance, the further you are from support, right? So if you huddle up against here, then you're only making the inevitable worse, and to some extent, especially on wedges and stuff like that. So you have the upside target of around $24. That's where I would say up. So target up is 24. Target down is 16. After 16, I would give it the PT probably dead center in the middle of this, and that's going to be 1460. Honey bunny, you there? Troy, you weird me out, brother. Why do I have so much faith in gaps? What is the theory or statistical certainty behind them? And what are some of the confirmations or confluences that you tend to use or rely on? You got a bunch next to your phone, bug. I got a bunch next to what? What are you talking about? I don't know what you're talking about. A bug? There's a bug next to my phone? There better not be no bug next to my phone, Libra. Oh my God. Talk about a dramatic ass article. Okay. So why do I have so much faith in gaps? There is a 80% chance that a gap is going to get filled. So what is the main thing that I'm paying attention to in a gap? So you'll notice when you break out of a zone into an all-time high, you tend to go on a run. And during this run, what happens is buyers take off. Bears aren't going to step up. Profit taking may occur, but as long as everything sentiment-wise, price target-wise is on their side, you're going to see the bulls likely exhaust themselves. And if you think about it, anytime, there's always somebody who's thinking, all right, I got to bag this, right? And that starts a chain reaction. But what's happening really is there's no previous resistance above you. There's nothing. It's just blue skies until you get caught, right? Or until the volume, right, decreases and you cannot make a new high. So with that being said, gaps lack volume because nothing was traded there. It was just a gap up. So when there's no volume there, nobody's holding anything there, there's a lack of volume in a certain level, that gap is more than likely going to get filled. And the statistics behind that are in the 80 to 95% mark, depending on the stock. Microsoft, always going to fill its gaps. Apple, always going to fill its gaps. Tesla, probably going to fill its gaps. I would just say most stocks are going to fill their gaps, period. Even Sony, which gaps everywhere, it just can't do anything without gapping still fills those gaps. So think of it, if you're thinking in terms of Red Rover, there's nobody there, or there's only two. There's just no strength there, because there's no volume. For example, right here, 277, right? Look at where we bounce. Look at all of this. You don't even get close. So it's always a zone, right? But you're still right around that level. So where we lack volume, we flush quick. Look at this. We gap down to right near that level, but it's also right where we break out. Bulls, it's just bull country, right? Nobody's traded much here. So when we do, which we will, fall, by the way, Microsoft, it looks like a hideous Head and Shoulders, absolutely gnarly, and the fact that we gap down makes it even worse. But that means that it's going to be easier to flush or push into an area. It's unoccupied. Nothing is there. So hopefully that makes sense. If it doesn't, let me know. Stories that retail step back in on Thursday. Retail ain't stepping on nothing. I'm just kidding. All right. Yeah, now that you just like stare at something. It doesn't. Microsoft doesn't have a Head and Shoulders. Oh, I'm not. That wasn't a joke about Ukraine whatsoever. I wasn't even thinking about that. It's unoccupied. That was literally it. Yeah, I'm not making. I'm not joking about that stuff. But anyway, Hunt. That's kind of my thing with that. So, the next one that we've got is what to buy. Spy puts are good for protection. Yes. Okay. So, Roland Warrior, you and me both, my friend. You and me both. So I ended up calling a hedge on AA as I went negative on a put that I'd taken, which AA, and I have a good explanation as to why this happened. Doesn't mean that I was right. I was just wrong, and this is what happened. So AA, which had just released bearish articles or had bearish articles released about it, dumped really, really hard and did in fact bounce. But when it bounced, it's set up for a squeeze. So once we filled that gap, AA, which already had a lot of people betting against it, ended up having a squeeze happen, like a little mini squeeze. And so you just went and saw resistances retested. So I think that if shorts are going to... Now, Russia, right? Aluminum, I do know that Russia, obviously, and I have to double check because I wrote notes on this one. So Russia produces about 7% share of the global aluminum production. So not a ton of aluminum coming from Russia, but it can impact the markets, right? And drive Alcoa in the opposite direction. That being said, I do, and this is only speculative, this downtrend that I have, but I am expecting Alcoa to potentially fall, at least back down to, I'm thinking we go back down to 73.40, right back down here. I'm going to mark a line for you. So right about there, I think we pull back under, and what happens there, I don't know. We'll figure that out when we get there, but that's kind of what I'm thinking there on Alcoa, is that we get a reversal. If we don't, watch it for a break past this 79 and into $80, which is crazy. 7% of the global market is a lot, but not as high impact as, say, I think Australia, which has a large aluminum production. So, I don't know. What are those monitors? These monitors are LG monitors. All right. Tesla. Okay, so Tesla, I actually had a similar setup on Tesla. Now this one, little iffy on everything at the moment with Tesla. Reason being is, first of all, we're about to gap down, and I think we might hit 760 to possibly around 775. If that occurs, we need a immediate gap fill. That being said, if you pull this over, there is a direct confluence with this resistance line and the 200-day EMA, so it's there. That being said, we either gap down and we fill this gap, and then we go and we push, and from there, I think I'm gonna go ahead and give you the 875 to 850 price target on Tesla to the upside to go and hit this 200-day EMA. But otherwise, to the downside on Tesla, if you step back out, and this means likely flushing even further, we've got a point of control, and if I'm not mistaken, I think it's like the teeniest, tiniest. No, it's gone. Okay, so all right, sorry about that. Okay, so I would be watching for Tesla probably to hit this. Oof, damn. I'm trying to be nice with it, but I guess I shouldn't be. Yeah, so I would look for it to around 575, but really maybe 650 would probably be your first stop there before falling that hard. But that's the next level, and you're likely going to open below that. So Tesla, and like I said, guys, we could go either way. We can continue to melt up, but yeah, nice eye on that CCL. Nice. DKNG. All right, so DKNG, and I think this was probably pretty important for DKNG anyway. There it is. Okay, so there's not a lot of volume in this stock right now, guys. It's kind of sucks for investors. This was like one of the stocks that people were like really, really excited about, and not so exciting anymore. This one is. So it looked like it was trying to go and test, or I think it did. So in fact, it did. It went up and it tested this downtrend. It's going to gap down, right? It's more than likely going to gap down around 20, or excuse me, yeah, maybe $20. So might see around 20 to 19 bucks. From there, small gap. So you're going to want to fill that gap and close above Friday's high, but at 22.30 for a break of resistance, hopefully into the 23.50 zone. Otherwise, you're going to find yourself likely down around 15 bucks for DKNG. So yes, futures being down the way that they are, if they continue to drop, yes, the market will open lower. So did Nvidia get hacked? Yes, I think they did. So you have an unfinished gap to 63.22. You had a bull flag. You're more than likely now going to open up around $60.67. And then obviously support is 58.50. So for Citigroup, and it had a bit of a correction there. Resistance is up around 67 to 65 bucks. Point of control being 64 here. So 64 to the upside, and then to the downside, Obviously, that's that 58.30, but yeah, so this is almost a double top. So if you do break support here, things could get unhealthy for Citigroup. Why is volume profile necessity? For me, volume profile is a necessity for actually one of the reasons that you see right here. There is high volume at that red line, and it's also where Citigroup rejects 2 times. That being said, it's notable that it's a strong level. Red Rover, it couldn't get its ass over. So in this case, for the volume control or the point of control, it's going to verify the strength behind each level and what that trade, because if you're day trading or even scalping, it's probably important to see, maybe the last month or less of volume profile if you're using visible range. If you're using, fixed range, for swinging or daily, you can focus on the last 4 or 5 months. I mean, it all depends. But it's all meant to identify strength. So if you're looking for a target, that's how you find a suitable target near you that is going to give you a rejection. So yeah, I guess NVIDIA. Yeah, Citigroup gap 67.70. So if you have any requests on TikTok, please drop them on our YouTube channel. Make sure to subscribe to us. I do appreciate it. I think we're close to 10,000 subscribers. I think. Let's see. Are we? 9.7. 9.7. Crazy. Yes, I have a Discord with 7 other people in it, and yes, we trade daily. Our Discord is open right now. Bro, Manny sends me the most inappropriate shit. You're not allowed to do that. Eternal Sunshine, thanks for getting on tonight. Thanks for being on tonight. Thanks for watching. I appreciate you guys a lot too. I wouldn't have a channel if it wasn't for y'all. 63.19 on that one. So, all right. What is next? NVIDIA. Holy sh. So, NVIDIA. I think this one goes down to 190. Somebody's gonna. I could probably get taken out for that. That is, I feel like, blasphemy. But if this is a deviation channel, all right, and I don't know that to be 100% certain quite yet. Hold on one second. That is absolutely horrendous. Huh. Interesting. Sorry, I was doing a little bit of exploring right there. This is live charting, guys. I don't get these shipped in. So obviously this was looking like a double bottom. big bounce off the 210 level. Was looking like it was going to go push up to 255. If they are going to be hit with this hack, a lot of these bigger companies can shake that off. We're going to need, you're going to have to look into that tomorrow morning and verify that that's going to be an impact. That being said, I would say for NVIDIA, likely we're going to open up around 230 or around 225. With that being said, again, we're going to have a gap to the upside around 240, and that's going to tell you everything you need to know about the day going forward. Do we hold that gap fill or do we reject it? And you guys are going to hear me tomorrow is if we go to fill that gap, you're going to hear me say, all right, here comes a moment of truth. We're going to reject or we're going to pull back. It's not going to happen in one candle, but it's going to happen. So, oh, Rivian skipped. I'm so sorry if I did. I'm going to go ahead and do a few more here, guys. I will be up in the morning to give you guys some more analysis and do a little bit more breaking down. But Rivian, I don't even have to look at this anymore. I'm short on this one. I was thinking we're going to go up and get one more hit, 71.87. 71.87. Ultimately, if I could, I would take my fiance's entire account and short Rivian down to probably $30. Going out like maybe 6 months. Maybe I'll do that. Lucid, same deal. All right. Now, Lucid's a tough nut and has a lot of has a lot of consumer sentiment that is positive, and investor sentiment that is positive, whether it's justified or not. This one, in fact, does appear to have a channel, and if it's a big word, if we do end up climbing to the upside, I would be looking for this channel top to get hit. So possibly, making our way somewhere around here and then climbing up to hit this channel. However that gets done, that's what I would be looking for. But the one challenge that we have now is that we're going to be gapping down. So we're going to want to fill that gap, probably bounce back down. We're going to have another time with 29 and $30, obvious psychological levels. So hopefully we hit 30, bounce off 29, and make our way up and hopefully hit this resistance line. From there, I am short Lucid, and I think you dump, just absolutely dump. Maybe not in one day, but I think you still have no reason to be around these evaluation numbers. Period. No, end of story. So I think they're going to continue to. It's in a downtrend. Let me just put it that way. You are in a verified downtrend. Thanks for everything you do. Tip you give, bro. Oh yeah, of course. I personally am short China, and I'm gonna throw one thing out there, guys. I really don't want to. I'm gonna be honest with you guys. I really don't want to. But it is what it is, and there has to be some type of separation emotionally from certain things. Yeah, there's certain things on lines I won't cross. When Geo was short squeezing private prisons, I didn't take part in that, nor will I ever. Like there's certain things that I just don't do. And at the end of the day, I think that the stock market in its current form is full of fraud and forgery and awful, greed, taking advantage of rich and our politicians and et cetera, et cetera. So I have a bit of a bias, I guess, if you will. But yeah, why you skip docu? I haven't skipped nothing. But Taiwan. TSM. It may be a play if China decides to mess around with TSM or Taiwan, because that's going to pull TSM down big time. So just throwing that out there. Shorting Taiwan. Yeah, just an idea. All right. Shit. Come on, fingers. Do what I tell you. Alrighty. So DocuSign, right? What a bummer. Everybody's been waiting on this one. It feels like some nap time music at kindergarten. Night with teacher. Sorry. I gotta turn that on a little bit. So obviously this is a breakdown and retest, right? So you're retesting the level that you broke. That's 115. So if you reject 115, which you did because futures are going to have you gapping down, there is a big chance that if you lose 105, 110, and 100, that you could drop to new lows on DocuSign. But if you don't and you fill your gap, then there is a resistance level that I have around 136.28. So holy crap. So Uber, again, this one actually went to go flush out of this. Immediate reverse, shorts squeezed, doji close on Friday, gap down, probably around 32.85, maybe even lower 32. Gap fill, push to the upside. You need to close above 36 to stay bullish. If you reject and you fall back down, I'm going to go ahead and give you the price target that Uber deserves, and that's going to be $28.50, ultimately making its way down to 25 or 24.50, excuse me. What? I think I just saw Justin Bieber just enter the chat. All right, I'm gonna do money mark. I did not sell my put on RSX. There are certain things that, like, at some point on Friday, I knew that there was no reason for the market to go up, right? There was no reason. There has to be a reason for everything. There's no reason for it to go up. None. But it did. And obviously we saw the squeeze, that kind of like, okay, this is what's happening. Everybody was betting down. It's going up. Tensions are seemingly, and they're taking advantage of those relief and tensions to drive the market back up. And they did. So when certain things, like, I'm sorry, but Russia's not going to stop going to war. They clearly have their eyes set on something much bigger, and everything that they say has been recently a lie. It's almost like they're literally doing one thing or saying one thing and doing the other. And they're just like, yeah, we're not going to do that. And then they go and do it. And everyone's like, stop doing that. And they're just doing it. They just don't care. So I feel like once that ball got rolling, that was one play I wasn't willing to cut, because I felt like, if anything, because it was on our market, it was likely getting squeezed. So along with everything else. But eventually that dies down too. And what does that do for market makers? Now we get a better average to short again. So anyway, I think Uber could continue to fall. So Simple Stacks for life. Hey, we have Simple Stacks t-shirts. If anybody's interested, just email us or DM me. It's like $25 a shirt. They're pretty sweet. They're like soft, super soft cotton. I do have this ridiculous shirt, a picture of my face, and it says the Wolf on Waters because my office used to be on Water Street. But I don't sell those. You gotta take it off my body. Wait, that sounded a little sus. I meant like you gotta beat me up. It's getting worse. All right. Anyway, let me know. I'll buy a T-shirt. Yeah, I got. Hey, if you get a Simple Stacks tattoo, I'll give you 3 years free. Maybe not. Actually, hold on, I'm gonna retrace that statement. Hey, yo. All right. All right. Friday was so that was a bleed up, right? So it's kind of hard to predict because honestly you had that massive gap on SPY. I should have known better. I got what I wanted and I got the gap down. I should have bought calls immediately. But hindsight's 2020. I learned my lesson and I will probably not make that same mistake again. But it all depends on the gap. So when it comes to SPY, if it has a gap, it's more than likely going to fill it to the downside or to the upside. So most of the time. LMT is currently cruising to the upside. War's getting worse. I can't imagine that Lockheed Market's not going to hit 440. Currently, it's got a 418, 418.50 and 425 right above it. Those are the two levels that I would tell you to watch out for, or could be potential targets to the upside. And you can see that those are valid. So, 1, 2. And you got a nice hold there, then breakdown. Breakdown. So yeah. Brickle Biotech. Someone needs to brick this thing in to a wall and never trade it again. No, I'm just kidding. It just has a bad chart. This chart's so bad. So these are the kinds of charts, guys, that it's beyond technicals, and yeah, that's it. That's all I gotta say. It's just beyond tech. It's beyond my help. I can't do anything for it. It's dead. And looking at this, were at $1.66, and you dumped to 20 cents. There's not much that I can add to a chart that looks like this, other than you're going to keep falling, unless something real happens. So you need to know who the company is, what they're trying to accomplish, how close they are to accomplishing it, who's funding them, etc., etc. So, but I personally, this is looks like it's gonna go. It could squeeze high short interest. Those are things to watch for, gaps. But this looks like, yeah, it looks like a no. Alrighty, y'all. I'm gonna go ahead and call it a night. Hopefully you guys have a good night. I sure am glad to have to be worrying about this stuff. Um, if you guys are waking up and tomorrow you got to worry about stocks, just be thankful, man, because this is a good week and just a good time as a human to have perspective. Uh, not to bring it up too much more, but watching videos of this, these places got Domino's and malls and like Tempur-Pedic mattress stores. Like it looks just like our neighborhoods. Just looks just like the city I live in. Um, and just to see it, people, humans just like us, going through this stuff, is pretty rough. So, my thoughts and prayers go to anybody out there on that side of the world. I hope some type of peace finds its way into the heart of Putin. I hope his mom hugs him, or whatever she needs to do to bring that poor child back to Earth. But yeah, I'm glad to be doing this stuff with you guys and not having to deal with other stuff. So, but anyway, good perspective there for me anyway going into this week. So, Anyway, you guys have a good evening. Make sure to set alerts. If you're charting and not setting alerts, then there's no point in charting. So have a watch list, have a plan, and be aware of the week that you're stepping into. This is not unusual. And remember how I showed you guys SPY moves. All right, go to the beginning of this, not podcast, but this stream, and go look at what we talked about with COVID and how things don't go down immediately. You know, this was almost a crash. This is more of a correction. So, anyway, you guys have a wonderful evening. Peace out.